All right. Hey, welcome back to another weekly review here of the markets from Maxi. I'm Max, and I'm joined like usual with Sid, and we're going to start this week by looking at the DXY again. So the DXY is the dollar strength index. We looked at this not last week, but the previous few weeks, seeing it trading within this channel that we have drawn out here in blue on the chart. And we were waiting for it to hit the top of our channel where we've recently, the last week, pushed above. And actually the Trading Buddy got us a bull print here, like you can see on the chart. And now what we're waiting for is, of course, for the strength band in our Trading Buddy there, the red band needs to flip to green and confirm the support resistance flip there to basically confirm we're going to continue to move up. Or if we don't get that flip, we'll see that this was a divergence, a break out of the trend with a retrace back into the trend. And, you know, depending on how that plays out, we're definitely going to use that information to inform our stock trading moving forward. But you can see here, the last week has closed now with a bull print, clearly pushed above the channel. And it's, you know, I mean, the RSI is a little overbought, so it's a little bit high. We're looking for it to like retrace, and that's kind of what we're seeing in the current week. So you can see the current open candle there has, you know, 3 days left to close. It's kind of it's Monday right now, so we're gonna
so it did push up past the strength band, like you said, and we've been like tracking this channel for months right now.
Yeah,
I mean, we shared when it was at the bottom. If you look back at our earlier video, we shared how it's going to hit the top of the channel, and it did, and now it's pushed through, which is important. And like Max said, we have a bull signal. So like. Now it's pushed through. What it's going to try to do is like basically like try to either like bounce on this, flip it, and then continue up. That's usually what happens when you like break out from a channel, a pennant, you know, whatever. It's usually like it always like tries to like retest and then flip it. It's called the SR flip.
And if you haven't drawn your own channel like this, you should expect that bounce to happen right on where the strength band is for the Trading Buddy indicator.
Right. So like if you see it, it lines up exactly where the strength band is. And how our indicator works is like it is that if you get a bear print, a bear signal with the red band, it just means that you're going to go into a downtrend. And if you get a bull and a green band, just like we did, you can see here, it goes into an uptrend. So it takes away the need for any like technical analysis or anything. All you need to do is just like use the indicator.
Exactly.
You can like trade very easily, you know.
Yeah, you have your signal, and you have your basically your resistance support line. Where if we're in a bull trend, I want to see closes happening above that line in the green, and if I have the bear trend, I want to see those closes happening below the line in the red. And just like you're seeing right here, we just got the green print, not yet the green band flip, but we are starting to close a full week last week above that indicator's strength band. That's a really bullish sign. That, of course, mixed with the bull signal.
Exactly. Now, what can also happen is that this could be a bull trap, in the sense that like if the price, if we shift the chart, you know, okay, we can say on the weekly, but if the price like falls back down, then it's probably gonna like, so let's do this once again. So I'll just mark out a new line here. So if the price like goes back down and like falls below support, and then like it can do this. So, and that's called a deviation, where it fails to like bounce on support.
Yeah. So we are still watching for that band flip and for that bounce on that line to confirm what we're seeing now is not just a deviation and is in fact a SR flip, or flipping the support, the resistance into support.
Exactly. So because the dollar has like, you know, cooled off and it's dropping, like today the stocks have been up. If you look at the S&P 500 or the QQQ, the NASDAQ indexes, they've been up. and you can see like basically it's moved, and we've talked about this before. It moves in the opposite direction as the US dollar, which is the DXY that you're seeing here.
Yeah, exactly. In general, as the dollar gains strength, equities tend to lose strength as people sell into dollars. And there's a big news, that we track to kind of go along with the DXY and the dollar strength, and that's of course the inflation. Basically, the inflation numbers that come out from the Federal Reserve during the FOMC meetings, which happen every, I think, 3 months or so. And so the next one of those meetings is actually next week, Tuesday to Wednesday. So
19th and 20th, right?
Yeah, so 8 days from today. And once that meeting happens, we will see, if what the market is kind of pricing in and expecting to happen does happen, then generally we'll probably will see that bounce and move up. Or if rates are increased again, that can be positive for the DXY but negative for the equity markets. So you would then see very clearly we'll move up. So currently the inflation rates for the US dollars from the Federal Reserve are 5.5%, which is pretty high. And the general consensus from market analysts is that the upcoming FOMC meeting will maintain that inflation rate. They don't expect them to increase it or to decrease it. So if they do increase it, that would most likely give some fuel to our DXY run, very clearly give us some clearance and support and push us higher, which also will then very likely sell off the equity markets, and we'll see the SPY QQQ start to sell off. So we definitely are keeping an eye on the FOMC meeting news. And like I said, that's going to be about a week from today. And so for the next week, it's most likely going to continue what we're seeing here on the weekly, probably going to continue to cool off. The stock market's probably going to have a decent green week this week.
Decent green this week. And then next week, everything is flat until the FOMC numbers,
and then out. Generally you might get a little bit lower trading volume on the markets and a little bit more volatility. So, we might see the VIX. The VIX index might come up a little bit leading up to the VIX, by the way, is the volatility index on the stock markets. So that, it goes up if implied volatility increases. That's kind of a little bit too deep for right now. But yeah, this is really an interesting one. I wouldn't mind if you toggle this to the monthly, because like I was saying, the weekly it does look like we're near the top. But ooh, baby, lots of room.
We talked about this, and we talked about this. I think like the last time we spoke about the DXY is the fact that like we got a bounce a month. The monthly close was pretty bullish. Yeah, like it's a bullish engulfing candle here, and a bounce on the strength band, and there's a lot of room on the starch to like. Yeah,
this is bullish all around.
So if this month also closes bullish, then like it could be trouble for.
Yeah, equity. So if Jerome Powell, the chairman of the Federal Reserve, comes in hot and raises the interest rates, that can definitely see us move the DXY much higher, especially on the longer frame timeline here, and that'll be wonderful for people who are in cash. Maybe a little bit scary for people who are heavily invested into equities.
Right.
But yeah, as usual, that's kind of the takeaway here. So we are watching the DXY closely, going to keep our eye on this. It's definitely, we're leading into the FOMC week again. So we'll be keeping an eye on the news of that coming out and expecting a little bit of volatility leading into the week of the actual FOMC meeting. So next week, while currently we are expecting to see this market continue to play out the way the chart is projecting, which is likely to continue to push the DXY down for the week, which will see the stock market continue to kind of rally before this whole FOMC news comes to light. As the DXY drops, generally speaking, the crypto markets will also move in inverse with it. So, dollars gaining strength, Bitcoin tends to, sell off just like stocks would sell off. And, we talked about Bitcoin and Ethereum markets last week a little bit. And there's always kind of new developments happening in that space. And last week there was one of the major wallet providers which is MetaMask, kind of got into the, I guess, more into the broker role that, they're now allowing users to cash in and cash out of their crypto wallets directly through their MetaMask app. And you can now do that, linking your bank account or your PayPal account to buy and sell crypto directly for fiat currencies. So fiat currencies being, cash currencies. And
that's really cool.
It's really nice,
because,
especially it gives you like an avenue to do this without having to sign up for a broker. Maybe
like an exchange.
Yeah. Within like an interface that you may already be confident with or comfortable using. So it is always nice to have these avenues kind of added to something that we're familiar with versus expecting me to like, there's a new exchange, or like Fidelity is now offering, crypto assets. And it's just like, and I have to learn all this, like, this different platform that I maybe am not familiar with. So I do really like to see MetaMask kind of getting into this role a little bit. I will say, as someone who does a lot of crypto, buying and selling, they have a relatively high premium price for their service. I believe it's close to 6%.
Yeah, it's close to 6%.
Which is absolutely, that's a little bit of money that you're take a haircut on when you're entering and exiting this kind of speculative asset sector. But it is kind of a premium that you pay for the convenience of it all. Since you can obviously still use your Coinbase, your Gemini, your crypto.com, whatever account you're already using, you can still use that and then withdraw to your MetaMask wallet as you have been before, and then be subject to the fee structures associated with those brokers. And those fee structures can be much, much less than 6%. But it's also another application, a little bit more of a learning curve to maybe use some like trading broker account. So it is nice to make this a little bit more accessible, although be aware that you are paying a little bit extra of a premium for the convenience of it all. Which isn't like an abnormal thing. So this was cool news. I really, really was kind of happy to see, MetaMask entering this, which that's awesome.
This is really cool.
And like, I've been using
and then
MetaMask
we have
before.
news on base chain.
Oh yes, we had another. So we had shared this news not too long ago for when we were trading on Arbitrum. USDC became a native asset on Arbitrum not too long ago, maybe a couple months now. As of last week, possibly even this week, very recently, USDC, which is the biggest stable coin in the crypto ecosystem by volume and by liquidity. And stable coin, just to kind of like clarify, a stable coin is a crypto token asset that has its price value pegged to a fiat currency, in this case US dollars, meaning that 1 unit of USDC is always equal to 1 US dollar. And so this stablecoin asset is issued by Circle, and Circle owns Coinbase, and Coinbase launched the base chain. So very, very quick moving here, obviously, with that kind of a connection. They now have native USDC on Coinbase's blockchain, base chain. And what that means is that if you're now holding USDC in your crypto wallet on the base blockchain, that USDC is counterparted, like the backing for that dollar is counterparted by Circle, and the backing is held. Circle uses BlackRock to hold its like the majority of this backing, and then BlackRock obviously doesn't just hold cash. They mostly invest into 3 and 6 month T-notes. And then there's also a few other bonds and stuff. But for the most part, it's relatively liquid and generating like an amount of interest. But what this means is that when you hold those currencies, like the USDC token in your wallet on base chain, its security can be equated directly to the security of holding USDC on Ethereum mainnet, for example. Where before this was launched, the options for trading with USDC on the base blockchain were limited to what are called bridged assets or bridged stablecoins. So the biggest ones were USD BC and AXL USDC. And so, but it could get a little convoluted. Yeah. So
it's like different versions.
Yeah. So stick with me, and I'll explain. I promise it does make sense. But what those assets are, before Circle, the actual party who issues this USDC, who's responsible for maintaining the backing value. So, they're responsible for holding the reserve that is, backing up the tokens that they've issued. And now that they're native, the tokens that you're holding on the base chain are also directly backed by this institution. Whereas before they were native, the tokens you were holding, for example, USD BC, that was a USDC, so same asset, same issuing authority, so still Circle. But instead of them issuing this USDBC token directly on the blockchain that you're using, base blockchain, they had issued USDC on Ethereum, on the Ethereum mainnet, which is, as we all know, it can be kind of expensive to transact on. You're expecting to pay like $5 to $15 per transaction, whereas the base blockchain is like 5 cents. But what you're holding when you trade USD BC is a token on base blockchain that has a counterpart in USDC on Ethereum mainnet. And then of course the Ethereum mainnet has its counterpart at BlackRock, managed by BlackRock, owned by Circle. And so there is this added layer of risk potential, or a point of failure, if you would, where if for whatever reason this amount of USDC on Ethereum in this backing contract that is being held there to represent USD BC, if there's an indiscrepancy between those two values, it adversely affects BC, because BC is backed by this pool, by the USDC pool on Ethereum mainnet, whereas if the pool on Ethereum mainnet gets hacked or stolen or drained in some exploit, the remaining USDC, no one else is affected. No one else is affected by that, because it wouldn't lose peg on Ethereum mainnet, but it would lose peg on base chain, because base chain, the asset isn't USDC by Circle, it's USDC by Circle on Ethereum, and so it is a big deal to get a native stablecoin like USDC on base chain, because now you have the ability to transact with the additional,
basically, you don't
security.
Need to bridge.
Yeah, exactly. You're not exposed to a bridge protocol's security. And if you keep track of DeFi hacks, especially the big value ones that make headlines, overwhelmingly those hacks target bridge protocols. And what happens is, the backing of a bridged asset is stolen, and then the bridged asset becomes worthless. And so there is always that risk when you're trading with bridged tokens on layer 2 blockchains. So having native tokens is a huge step forward for people who are willing to take a risk and put millions or hundreds of thousands of dollars into this environment. You want to manage your risk, and this is a huge step in managing your risk by being able to only expose yourself to USDC and directly to Circle and BlackRock's management and all of that stuff, versus adding that additional layer of, all of these tokens also have to stay on this mainnet wallet address, and if that address gets taken advantage of, you can be boned. And so and then same deal goes for like AXL USDC. That's the same thing, except for with the Axel protocol, which bridges between multiple like blockchains. And when you're trading that token asset, sure, it's worth 1-to-1 with the dollar, as long as its backing counterpart from wherever the mainnet token comes from, or the actual native token comes from, is still there. So, given the choice between a native or a non-native stablecoin, native is the way to go. And now base chain has native stablecoin in the form of USDC, which again is the biggest stablecoin in the crypto ecosystem by volume, by liquidity, and honestly by legitimacy and institutional backing.
Right.
BlackRock isn't some unheard of broker. We're not talking. It's not like
Trillions of dollars.
Yeah, exactly. It's like one of
Advantage,
one of the companies that owns the world.
Yeah. Totally.
Exactly. So it's not like Silicon Valley Bank or something like that, where it's like, it's a multi-billion-dollar business. This is a multi-trillion-dollar hedge fund that has absolutely transparent operations, does produce audit reports on the backing of USDC regularly, and it's not some fly-by-night operation that will tank to zero in a matter of hours. And as dramatic as that sounds, that's also not uncommon in this space. So
Right.
So this is really, really big news for Base Chain. It's not a surprising news, of course. Circle owns Crypto.com. Owns Coinbase, and Coinbase owns the Base Chain. So very direct connection to, obviously Circle, and that's why you got this very quickly. But this is a big deal, and this is going to ripple through the DeFi ecosystem now on Base Chain, where a bunch of these protocols that have been only able to use bridged USDC are now migrating a little bit more of their treasuries and of their TVL, which stands for total value locked. So the value that's within their DeFi protocol contracts is migrating into this native token. And of course, if we're savvy to it and we're aware of it, we can facilitate that migration by supplying liquidity, for example, to pools that are, let's say USDC native and USD BC, which is native to a different chain. And so as long as that other chain isn't exploited, both of those assets will be $1. And as people are trading between the two, there's relatively decent opportunities to supply liquidity and earn trading volume yields on what amounts to dollars paired with dollars. So, the risk profile of a position like that is relatively moderate or low even. And, especially in these early days of this rollout, the volume that hits those pools is pretty high. So this is an interesting one to keep track of if you are a little bit more of an advanced crypto user, DeFi kind of like aficionado. This is something you can, act on to structure some positions to capture some of this yield from the volume that's going to be moving as protocols migrate into the new native asset. So that's a really cool development this week as well. But yeah, the big takeaways this week though is we're watching the DXY. We're going to be looking for the FOMC meeting results. So again, keep in mind, mark the calendar. Tuesday and Wednesday is the meeting. So by Wednesday, we should have the actual inflation rate numbers, which is the 20th. September 20th. And once we have that, we'll almost certainly get a little bit more clarity here.
Or the FOMC.
Yes. Yeah, for the FOMC. So that's going to be affecting our DXY. And like we said, we're watching for the DXY to basically perform an SR flip. So we want to see it bounce now, basically on the Trading Buddy's strength band.
Yep.
We already have our bull print. If we get our bounce, we should get that green band, and that would be the moment for us to act basically on that time frame.
Yeah, basically, if you're into forex, all the forex traders can long the dollar.
Exactly. Yeah, there's another.
Or continue to long the dollar.
Yeah, continue. That's pretty much. A lot of people are long the dollar at the moment, and it makes sense. The dollar has quite a bit of strength now. It's also the plus side of the dollar gaining more and more strength, and the FOMC or the Federal Reserve increasing interest rates is that we're seeing really high interest rates for really low risk positions. Like you can currently buy, I think Fidelity recently announced their their CD payouts, and it's like 5.4% for like a 6-month CD. And so that's fantastic. A CD is a certificate of deposit. It's basically you deposit money into this account, and you can then withdraw the money plus the yield at the end of the term. So if you're doing a 6-month CD and let's say you do $1,000 into it, then you would, 6 months from now, you'd be able to withdraw $1,000 plus, the 5.5% APY. So in 6 months, you'd expect to like 2.7 or something percent. So then, you could withdraw $1,027, $28 or something 6 months later. And it's all FDIC insured. It's pretty attractive. And obviously, as the federal rates go up, the rates offered by the banks to the individual traders go up as well. So it's like, federal rates are 5.5%. CDs right now for 6 months are 5.2 or something. So it's like, oh, they can borrow money from you for a little bit less than they can borrow money from the Federal Reserve. And it's an interesting time for that, and they even have some 10-year CDs offered at like 5% or 4.8 or something, which that's substantial considering, you can lock in that yield for a full 10 years. Of course, the shorter term ones are producing higher yield, and that's that inverted yield curve that people have been talking about. But we can touch on that next week when we look at the FOMC meeting and see what the new inflation rates are. So until then, let's keep our eyes on the DXY, and as usual, the crypto market always has its moves and its news coming and going, so we'll keep our eyes on that. Anything else you're like excited for, looking forward to this coming week, or it's mostly
I
eyes
think
on
just trading stocks, like we do. Because of the dollar dropping, like we're gonna probably see the stock market run up.
Yeah.
So I know we talked about Carvana like a few weeks ago. So
yeah, the little handle that we said was bullish is continuing to bounce. Very much bullish.
There you go.
It's been a good Monday. So, we've been green on quite a few positions.
Ready to play the next pump.
Yeah. So we'll be in Discord sharing our moves as usual. We had a great green day today. Lots of profit bags. Waiting to see how they turn out tomorrow. But on the wider spectrum, we'll see you guys next week with updates to these predictions and see how the FOMC news came and how the markets are faring. Until then, thanks for joining us, and we'll talk to you, or we'll see you next time.